Hello everyone, welcome to a new video. Today I will be analyzing the company of Agrify that just will start trading actually today, January 28th in the Nasdaq under the ticker symbol AGFY. Actually, at the moment of preparing this video, it still has not started trading, but probably by the time I publish it, it will already be out there. However, this should not have any effect on us because we will be doing deep and fundamental analysis of the company, and I think that the immediate price difference should not affect our decision on whether we like this company to invest in or not. Anyways, with this video, I will try to put hours of research into roughly a 10 to 15 minutes video to give you a good overview of the company and also to hopefully help you determine whether this might be a potentially good opportunity of investment for you or not. But as always, before we start with everything, let me just quickly give you a brief overview of the points that will be covered today. Firstly, I will be giving an introduction to the company, some general metrics, and also the industry. We'll be talking a bit about it because in my opinion it has a lot of potential. Afterwards, we will be looking into the financials, followed by analysis of the competitors and how Agrify positions itself in the market. Then we will be talking a bit the IPO price and discussing a bit whether it is too pricey or not. And finally, I will basically be giving my own opinion, and also I will be sharing with you my future plans when it comes to whether I'm planning on buying or not this stock. But with that said, and before I start with the juicy part of the video, let me just quickly remind you that it would mean a lot to me if you could give this video a like. It really takes just a second, and trust me that making this type of videos takes hours and hours of research into the company. So that would make me super happy. Thank you so much. And with that said, let's begin. Agrify is a company that was only founded in 2016, and as they like to call it, they offer premium growth solutions for indoor farming. And in other words, to not make it so complicated, and I think that in this case an image is better than any words, they basically offer services to build the setup and also the technology behind an indoor farming in general. Especially, they are very much focused on a concept which is vertical farming that I very much like. And what this consists on, basically, as you can see in the picture, is of cultivating vegetables and other plants inside a building with different levels and in a very controlled space. And I like a lot this concept because I think that it's a great solution for the increasing population of the world, as with the same surface, amount of surface, you can produce much more food than if you would do it in, a more traditional way. Not only that, but it also allows you to control all the different elements of the production from, the water, the amount of light that these plants get, also the humidity of the space they are in. And this just allows you to have a much more consistent final product, and also you can even produce, fruits or vegetables out of season and be able to also sell them at much higher prices. This would be a bit of an overview of what Agrify helps build, and as I already said, they provide kind of like the whole package. So imagine that you now have a very big building that you would like to do, vertical farming inside it, and you basically would contact Agrify and they would take care of installing everything from all the equipment to the software needed to run all of this place, also, the lights, the water flow, just everything. In fact, the value proposition of Agrify is really, as we just said, to put together in a package all the things that many of its competitors are selling but separately. So maybe there is one selling just the lighting, another one the software, another one the infrastructure. And what they do is just try to really package all of these and sell it as one thing to make it easier for the client. Also, they claim that the solutions that they offer are better than other approaches. As you can see in the image extracted from their SEC filing, they have an estimated building cost which is much higher than other techniques, but then if we go down to the returns, these are also much higher, which again, if it's really true, then it is a great value proposition. But now let's go a bit into the industry to see what is really the potential of this market. And on it, again extracted from the SEC filing, actually almost everything in this video is from there, the indoor farming market is projected to grow from $114 billion that it was valued at in 2019 to $139 billion in 2025. And more specifically, the indoor farming technology market, just the technology, is projected to grow from 31 billion in 2019 again to 53 billion in 2025. And now going even more specifically into Agrify and the vertical farming market, this is expected to go from a valuation of 2.23 billion in 2018 to 12.77 billion in 2026. So we see that overall the market conditions are great for Agrify to grow, because even if it's not the market leader, the market in general is growing, so it should also offer opportunities to Agrify for growth, and as we will see later on, it's growing quite a lot. But now I would like to also mention another topic, which is that of the cannabis and the legalization of it, because as you probably know, the Democrats are now in power in the US, which basically means that there is a very high chance that they legalize cannabis. And this would, of course, or is generating a lot of expectation at the moment, because as you can imagine, the facilities of vertical farming are perfect for the cultivation of cannabis. But as you can see right now in the image on the screen, actually vertical farming at the moment is applied mostly to other plants and vegetables, with, for instance, salad greens and herbs being the most popular, although there is, of course, as we mentioned, cannabis, berries, and others. Moving now into some other metrics of Agrify that are very relevant, very relevant, specifically for investors like hopefully you and me, is that for the 9 months ended September 30th, 2020, so this year, they had 77.8% of the revenue they had came just from 3 customers, which means that they are not diversified at all. Essentially, if these 3 customers now decide to go and not work anymore with Agrify, Agrify is basically left with almost 0 revenue. Nevertheless, I also must say that this is a bit better than what they had last year, because for the full 2019, 99% of the revenue came from just 2 customers. So they are working a bit on this, but certainly it's still at a very risky, an early stage. Now let's move into the financials though. Firstly, looking at the income statement, we see an incredible revenue growth from 2018 to 19 of 131.09%, and this year, although we only have data from the first 9 months, even just with this, revenues are already up 89.19% versus the previous year, and we are still missing 1 quarter, so I would expect again this year for revenue growth to be above 100%, which again is great. However, the not so good part of the company is that they are not profitable, and actually they are losing a lot of money, as you can see in the image on the screen. And sorry to say this, but with the numbers that they are having at the moment, they still look far away from running a profitable business. Just looking at the most recent data, for the 9 months ended September 30, 2020, they had revenues of $7.7 million, but the losses were even more than these revenues, standing at $8.5 million. Having a look now at the balance sheet, we see that based on the numbers of September 30 this past year, they had a debt ratio of 67.44%, which was good and quite conservative, really good. But also there has been a massive improvement, which is something that I would like to highlight, as at the end of 2019, comparing with the the last balance sheet that we have data from, their debt ratio was of 124.95%, which means that they basically had more debt than assets, and that is essentially super bad, because if they were to go bankrupt, they would not even have enough money with all of their assets if they were to sell off their assets to pay for all the debt. But I'm very glad to see that this is looking much better. After looking at the financials, it is time now to go and analyze a bit their competitors, which by the way they have quite a lot. As you can see in the image on the screen, again extracted from the SEC filing, they have many different ones, but they specialize in different aspects of indoor farming. So one in the software, one in just the lighting, and while instead Agrify tries to really focus on having this all as a package. And the approach of Agrify, as we said, is interesting, but the amount of competitors is substantial. And also in this list, I don't see Hydrofarm, but they also provide equipments for indoor farming, and went actually public this past December. And not only they provide similar services to Agrify, but actually their revenues for this past year, 2019, were of $235 million, while Agrify only reported $4 million during the same year. And also we need to consider that Hydrofarm is reporting profits, while Agrify is still far from reporting this. But let's move now and talk about the IPO and the pricing of it. And on that, the initial price offering is of $10 per share, and they are putting in circulation 5.4 million shares. And to compare this a bit with Hydrofarm, that I just mentioned that it went public as well, in December, so not long ago, this is a little bit pricey. In order to more or less compare the IPO prices, I did a price to sales ratio, because unfortunately I could not do a price to earnings ratio because, as we said, Agrify is reporting losses, so that was the only way that I could more or less compare these both companies to get a better understanding of how pricey or not their IPO is. Doing this, as you can see in the screen, we have a ratio of 13.21 times sales for Agrify, and for Hydrofarm, based on the IPO price of 0.74, which is a massive difference. Nevertheless, for Hydrofarm, the price has more than tripled since it started trading, and now the price to sales ratio is of 2.73 times. And on all of these, it is true that also, we need to consider that Agrify is growing revenues at more than 100% year over year, while Hydrofarm is just around 20% year over year growth. It's also a much more well-established company. So here as well a bit the difference, in the pricing and this ratio. But now, based on everything that we have mentioned, I think that it's the perfect moment to give my opinion on Agrify, and I must say that I will not be investing in its stock, although I really like the thing or the idea of vertical farming, and making the most of the limited space that we have on Earth, because when we are just cultivating, on a field, then we just have one layer. But when we cultivate instead in indoor farming, we have in the same space, we can have like, I don't know, 10, 20 layers. We can go up as high, well, not as high, but we can go really up and cultivate a lot, which I really think that it's a great idea. But at the moment, I think that this investment is too speculative and risky for me. Revenues are increasing a lot, yes, true, and that's great to see, but they are coming from very few sources, so they are not diversified, only from 3 players, as we see most of them, which I don't like a lot. And also they are reporting massive losses, and on top of that, they also have quite a lot of competition, which is also much more established in some cases than Agrify. And also a thing that I didn't mention about Agrify is that it puts together several products, but sometimes the products that it puts together come from other suppliers. So it's not reliant just on how well they do it, but maybe their projects are delayed because they are missing something from a supplier, and this is something as well to take into account. Finally, something that I don't quite like, but that's just a bit myself and morally specifically, is that a lot of the growth projected for vertical farming companies is just based on cannabis and the potential of the industry if in the end the Democrats end up legalizing this. And personally, I'm a person who is completely against drugs. I don't smoke, I don't drink, I try to be very healthy. So for me, investing in a company that indirectly is contributing to cannabis and so on, it just doesn't feel right. Nevertheless, if I had to invest in a company, I would rather go for Hydrofarm than Agrify. I know that I didn't mention much on Hydrofarm because the video was not on that, but I encourage you to do your own due diligence. Again though, I just want to remind you that I'm no financial advisor, that everything I'm sharing in this video are just my thoughts, my personal plans with it, and that I'm just doing it for entertainment purposes. Anyways, with that said, this was the end of the video. Let me know down in the comments below what your thoughts on Agrify are. Are you planning on investing on it? If you enjoyed the video, then please don't forget to give it a like. Subscribe to the channel if you're not yet subscribed. And as always, see you next time.